welcome everyone to this very special and important conversation that we are very excited to have at the Fourth Effect. The topic today is equity ownership and how to negotiate it. Before we dive into the meat of today, just a very brief word about the Fourth Effect. For those of you that don't know, we are really a brand new kind of board marketplace that's very transparent. We like to say we're the Bumble of boards. Women have the power to make the first move. What we are doing is helping startup and growth stage companies build out and leverage advisory and governing boards. So basically find talented advisors, directors, and funders in order to help their companies scale and grow, take it to the next level. And simultaneously, we are helping women on the other side of this marketplace break in and get their first for-profit board opportunity, whether that's maybe an advisory role, maybe it is a director seat, it's an observer seat with a startup growth stage company. We also really understand the importance of investing when it comes to this world of sitting on advisory boards, sitting on governing boards. So we do have a very active backroom investment club. For those of you that are listening on this call, we are going to share a link to, we have something called the Unstoppable campaign. You click on it, there's a secret code to get inside. There's a little video, gives you the backstory on us, but you can, for free at no charge, go ahead and sign up if you are an accredited investor to kind of join base level investment club activity that we have going on, which we strongly encourage you to do. And then, of course, you could opt in and join us at a premium level if you aren't already there. And this is if you are looking to advance that for-profit board career, you want to access the 700 board and board adjacent opportunities we have in our marketplace. You can do that. We have more investment opportunities in there. And we have this idea of buying a board seat. So angel advisor opportunities. So all of those you can unlock. If you're a founder, come join us because we can help you get funded. We can help you find the people that will take you to the next level. So that's the pitch about us. We also are dropping the link to platform tours. We do them every Monday at 12 p.m. Eastern Standard Time. So that's a great way to come in, see inside, and get signed up. You can also just join directly through the Unstoppable campaign. We do have a board boot camp coming up on December 12th from 12 p.m. to 2 p.m. Eastern Standard Time. So we'll share that link as well. We'll give you a code to bring the price down to a cheap $15 butts and seats price. If you're a member, everything is free, always. Enough about me. I want to get to the point of today, which is Natalie Levy. So she is the founder of She's Independent. This is a woman first or women first investment group offering an entirely new way to support women's financial independence and influence by getting more women on the cap table, into the boardroom, and into positions of influence. So obviously someone, we are cut from the same cloth. Over the next 12 months, I think She's Independent plans to deploy over $2 million of capital collectively. And they have invested in 13 deals since its formation in 2022. So busy, really exciting. Now, Natalie herself, I know that you are an accomplished engineer, turned Wall Street derivatives trader, investor, and advisor. This is a great background for what you're going to speak to everyone about today in this room. I know that you have had a lot of tech operational experience, and you also have experience with a large portfolio of seed stage investments, and you've seen what's happened there. So really can't wait to have you share fundamentals around stepping into that investor mindset, and then along with helping people have a negotiation framework that can help them really make sure that they're equipped to know how to negotiate equity. And then also love to get to this topic of buying a board seat and what we mean by that, why you would want to do it, and who it's applicable to. So with that, let me turn the floor over to you, Natalie.
Great. Thank you so much, Breen and Kat. Really excited to be here. And I think it's so clearly aligned in terms of what we do, our missions, values, women first communities. And, this is a topic that I'm super excited about. I'll quickly say, in addition to everything you shared and the success I've had in terms of being an angel investor and spending time in institutional finance, I have experience negotiating, and I've both leveled up my comp package and supported others to be able to get over 40% year-over-year increases, which is pretty substantial. And I've negotiated equity packages numerous times on behalf of myself and supporting others. So just want you to recognize that, equity and ownership is something you can absolutely negotiate, and you can absolutely pay to play to, land board and advisory seats, and we'll talk about it. So I want to quickly mention, today is all about you learning and establishing, let's say, some, knowledge that may be new for you. And so I welcome if you have questions, comments, if you're confused, ask, right? I think using your voice, speaking up, you can always send confidentially a question to myself or, Breen if you want, but I welcome it via the chat, or if you want to come off mute. We will have some time, Q&A later on, but if there's something that I say and you don't understand it, we can slow down, we can repeat. I welcome it. And I know that if you're confused, other people will also be confused. So quickly, in terms of the agenda, I want to start with, what's your why? I think that it's such an important one, especially us as predominantly women, it looks like, who are a part of this. And then we'll talk about a negotiation framework. We'll dive into equity and equity concepts, also some angel investing kind of thoughts and, why I think you may want to play. And then, some things to leave you, with out of today, where you're not going to learn everything in the room, but you've showed up. So congrats. And you can start, hopefully the journey of asking for more and asking for what's aligned and stepping into your first or maybe 10th board seat. So we'll get started. I quickly like to ask, as we're kicking it off, what you're looking for. I realize a lot is happening in this world. I'm a Jewish woman. I'm a woman that has empathy and love for all the people that don't look like me and that are in very tough, positions all over the place. I'm somebody who's, dealt with multiple, and I'm open about this stuff, suicide losses and mental health and illness. So I just want to acknowledge we're in a tough place in the world. So thank you for being here, and I welcome all the things. So show up, invest in yourself. It's not just about money. If you want to share anything in the chat, why you're here, what you're excited about, you want to cry, I'm here for it. And you can also do it later today if you'd like. Thanks, Sarah. I just started painting, and painting is something for me that's really helped with loss and connection and peace and all those things, headspace. My story led me here. I think your why is so important. And if you find it and you uncover it, right, you're unstoppable. And I shared a little bit about the suicide loss. We lost my mom in her 60s after divorce. I couldn't be a bigger proponent and fan of how do we support our women of all ages, women that don't understand their finances, women that are stepping into their financial influence, women that have partners but are not stepping into the conversation, not letting our partners and not taking a back seat, because as women and as young girls, we weren't taught about money. We have to start somewhere, right? You can be a woman, you can be a deal maker, you can wear short shorts, that's me in the middle. You can speak up and make sure that people stop harassing and, hopefully stopping that Me Too moment that's happening to a girl probably every second where we live, and much worse things happening globally. So that's a little bit of my why. And truly, when you uncover, what's the thing that drives you, whether you're asking for the thing, whether you're trying to step into, a bigger career or board seat, you're going to start showing up a lot more powerfully. So I just want you thinking about what's your why. The gaps, just to remind you, and I believe you probably are aware of some of these, the wage gap we hear about all the time, the 83 cents on the dollar, but the equity ownership gap. How much ownership do women have for their male counterparts? 43 cents on the dollar, way worse than 83 cents. And by the way, far worse when we're talking about women of color. The VC funding gap, which is now actually less than 2%, the number was updated. Again, far worse for women of color. Where are the VC funds going? So I want to get you as women thinking about what is your financial influence? How do you step into it? So let's quickly talk through the negotiation framework. The negotiation framework that I use, that I present on, it's a place to start. And I don't want you just saying, wow, that's the thing I know how to do. Great, pat on the back. I want you saying, wow, that sounds uncomfortable. I don't like that. I want you leaning into that. I want you taking away not just the things you're good at, but what can you do in terms of where can you learn? Another gap, by the way, Breen, I didn't mention was the women on boards gap. Oh my gosh, right? So gaps all over the place. So let's talk about mindset and confidence first. I sometimes in the middle of the day am going out back and snuggling with my dog on our grass, doing some outdoor yoga, taking headspace, taking naps if I need to, feeding myself well. Where is your headspace, right? What are you doing for confidence and for your headspace? And there's so much in terms of, mindset and confidence. It can be the affirmations, it can be, basically taking the time in the space. And it can also be recognizing why you should have the mindset or the confidence going into the negotiation. Let me give you an example. If you're with an employer and you're asking for, a raise, or you're, a new candidate for a job and you've already gotten the offer, recognizing the strategy around that, recognizing the fact that if you've gotten the offer or if you've already been performing in a role, they're committed to you, knowing that you can ask for the thing, doing the legwork and understanding, the mindset around there's a reason you're showing up and asking for it. How do we get you to a place where you're showing up with that executive presence? It's the practicing. I put on some mascara before this meeting and some fun earrings, right? What gets you in that headspace so you can show up and you can take up space in the room, even in the Zoom room? What are the things that you need to do so that when you show up, you've practiced it a million times, you can articulate the points of why you're the candidate, why you're the one. And when you practice it in a mirror to, a friend, to, a mentor, even if you're not good at talking about money and asking for things, when you practice it and you have the script and you've done the work, you're going to show up with the mindset and the confidence. Information and research. Let's talk about this part of the diagram or the framework. There is so much for you to gather and uncover. If you walk into a negotiation where you don't have information, you have information asymmetry playing against you, how are you going to negotiate for the thing, right? You can't. Talking to recruiters, speaking to others who maybe have the background or the expertise, talking to whether it's mentors or colleagues or, having these back channeling conversations. Get the frame of reference. You can't walk into a negotiation and ask for something that's so out of left field that you're not playing ball. You have to walk in and you have to know, well, what can I ask for? Let's just say that they're offering a job for, $80,000. And you've done the research and you've done the legwork and you know that the market actually is paying $100,000. If you go and asking for 150 and you put your foot down, that's not going to look good. But if you go and asking for 110 and you're giving them substantial reasons as to, this is why I need the thing, great. And by the way, I might be giving examples of salary. We're going to be getting into equity ownership and really defining that, but I'm just giving you a little bit of that framework for equity or for negotiations in general. This works for any kind of ask. A negotiation is you choosing to say, I'm going to step into and ask for something. And by the way, the strategy and what you're doing, you shouldn't be saying, how do I get the most possible? And how do I bang them over the head? And how do I get what I need? It's a dance, and it's saying, what are you getting that you need and that's aligned based on your value and based on your alignment? But you want to both be walking out of that saying, great, I got the thing. And you want that company or that, maybe it's the board so you picked up. You want them also excited to work with you. It's not just about demanding. It's figuring out and getting to the thing where you feel good and you're both winning. That's a really successful negotiation. And more on that strategy and skills, there's a lot of human biases that can play against us or we can use for us. A book that I always recommend, Thinking Fast and Slow by Daniel Kahneman. You can also read Michael Lewis, The Undoing Project. But basically, it's understanding things like how you show up and how your mind can play games against you, or people can use tactics that can work against you and how to flip them. So let me give you an example. Anchoring. The first number thrown out anchors to that number. So you want to throw out the number first if you're anchoring in your direction. Or if somebody else throws out the number first, and if it seems unreasonable, you basically need to say, you know what, that number just doesn't work for me. We need it off the table, and then I can engage in the negotiation. So that's anchoring. silence. If you've never played with silence, it's a huge one. Let me give you an example. I would love to step into that board seat. I'm prepared to write a check for $10,000. And because of my expertise, I know that it would be such a great fit. How does that sound? Uncomfortable, right? That silence. But when you wait and you create that silence or that space, you're basically not giving up more information, and you're waiting and you're letting it sink in. And the person who speaks first, if you've put out a question and they answer it, you're getting information using silence. And maybe that wasn't the best example of, a silent treatment, but sleeping on it, letting it sit with you, making sure you're being intentional when you are going to accept an offer or when you're trying to get information. So I know we're running through some of this, the framework, and we have examples later, and I want to talk a lot about equity and board roles. So we're going to go through a little bit more of this at a little bit of a faster pace. But again, questions are welcome. So what is equity? What is ownership? Or I guess I'm defining it right there. It's company ownership. If you have equity in a business, you're not just working for the business, you're also an owner in the business, right? It's participation and upside, but it's potentially or possibly this kind of lottery ticket or liquidity event, meaning you might get paid on it, you might not. The fourth point on this slide, which I want to point out, is it's cheaper for the company to give away. Okay, they're not giving you cash, they're giving you ownership. So they may be paying you something in the future if there's an exit and acquisition, an event where you can get paid, but it's typically going to be a lot cheaper for the company to give away. So when you're thinking about negotiating and asking for more ownership versus just being paid more in cash, it's just important to be aware of that. And what we're going to focus on in this conversation is we're talking about ownership or equity in private companies. And there's many different assets that you can invest in as an investor. I've listed some here, right? Public markets, I'm sure you're aware of. Real estate, royalties, income streams, art, NFTs, foreign currency. There's many a thing. We're going to be talking about private companies, and there's different ways to be an owner or an investor in private companies. I've listed a few on this slide. Shares and RSUs, or restricted stock units, are one of the means that you may get exposure to a company. Maybe it's a publicly traded company, or maybe there are reasons why they might give you restricted stock units over another, form of equity. Options, which I've made bigger and, kind of enunciated on this slide, which we're going to talk about, because this is something that oftentimes is going to be the private company, offering you options. Maybe you're stepping into a board seat and there's an options package. So I'm going to walk through this in more detail. There's convertible notes and safes, which if you are a private angel investor, is especially early stage angel, that's a lot of times the type of instrument that you're stepping into for various reasons. And a safe note, just to define it, is a type of convertible note and basically a simpler form or structure for a company to raise on. And then there's other debt instruments as well. Breen, I know we were having a chat before we kicked off the recording. If there's anything you want to mention on other types of, and no need, but any other types of securities, you're also welcome.
Okay, yeah, thanks. No, I'm good for now. I do think making that point of like really early stage, pre-seed, seed stage startups that haven't gone through the expense of creating an equity incentive plan, or specifically one that allows stock options,
Yep.
then you might be receiving restricted stock,
Yep.
as a grant. And so just making sure that people understand that it makes sense in that context.
Yeah, restricted stock. And listen, I've also signed safe notes or convertibles when I've stepped into board seats. I mean, there's all different types. We're going to define, some terms and definitions so that you can start to understand this stuff. It sounds like you might want to.
Yeah, you know what? That actually gave me an idea. I think one thing we're going to cover this, but I know that sometimes people will use warrants as a kicker, like to expedite a close, like to get
Yep.
a deal or get someone to write that check by a certain
Yep.
date? Okay, so just
Absolutely. Yeah. That's not warrants, right? Other debt instruments. So there's a lot of instruments. I'm not expecting that you're going to be a financial expert, out of today's call. It's really about introducing this stuff. And part of it is when you start to have the conversation, you say, oh, I understand that term. Then you can start to learn more deeply. And then you can start to step into negotiations because you can't negotiate something you don't understand. So this slide, which is understanding the equity in the scope of options packages, let's talk about what these things are. On the upper left quadrant, I have percentage of ownership, not shares. I can't tell you how many really bright people I've worked with where they say, oh my gosh, I have 20,000 shares in that company. Great. What was the last valuation? What are those shares worth? Crickets, right? If you don't understand the percentage of ownership that those shares represent, you don't understand the valuation. You're not going to understand, and you can't put a dollar price on it. When you start asking the questions, maybe you got an offer or you're negotiating to get something and they say, okay, 20,000 shares. Great. What's the percentage of the business? What is the, valuation, or what was the last valuation of the business? Then you can understand, oh, it's at this valuation. This is my percentage. So the shares are only worth, or the options are only worth 20 grand. That's nothing. Again, I'm just giving you an example. You have to ask the questions. You have to gauge in the dance. The cliff on the lower quadrant is basically the terminology for how long until you start to vest or you start to have ownership. Meaning, if there is a 1-year cliff on your options or your package, and you leave before 1 year, you stop working with them before 1 year, you get nothing, 0. 1 year is a standard cliff for employee options packages. Again, let me repeat, employee options packages. So if you are stepping into an advisory role or board role, you can oftentimes get a much shorter cliff. If you've already worked with the business and you've already added a lot of value, maybe you can get no cliff. But oftentimes there's going to be a 3 to 6 month cliff for these, more senior roles that you can step into. And oftentimes you have to negotiate to get it. I love that. Jenny mentioned in the chat, asking about the valuation and ownership percent has resulted in being treated with respect. Absolutely. You're showing up with knowledge and you show that you're a player, right? So great. Don't feel bad asking these questions, right? You're gathering the intelligence that you need to make sure that you're landing the right package. They'll respect you for it. All right, let's talk about the vesting schedule. The vesting schedule is basically how long until I own this. Meaning if it's a 4-year vest, if I leave after 2 years and it's straight line vesting, I get half of whatever the package was. If I leave before 1 year and there was a 1-year cliff, I get 0. If I'm there for the 4 years, I get the full vest. So understanding that. Typically, it's a 4-year vest for employee packages. Board and advisories packages, let's talk about it. What if your term as a board member or an advisory member is 2 years? Don't you think it's fair to get a 2-year vest? You may have to ask for it. But there's a reason you're asking for it, right? And by the way, maybe you spend the 2 years and you're vested. Maybe you should get a new package. So really understanding what these are so that you can navigate into something, that's meaningful and aligned. The cap table on the bottom right. Oh, and we have a question real quick. What if they part ways with you before you reach the cliff? Do you have any leverage? Great question, Carrie. A friend of mine who's a woman of diverse background in the Bay Area did leave a company before the 1 year. She dealt with a lot of, let's say, harassment, me too, and lack of, mentorship support, all the things. I believe that she did actually get something done before she parted ways with the organization amicably. So you can ask for the things, but typically as an employee, if you leave before the 1 year, like you're leaving it on the table. And let's see, we had another question for advisory role. Is the question how long if the term for the advisory, or how long if is the cliff? So I was basically saying you probably are able to and want to match the vesting schedule with the term if you're stepping into an advisory or board role. Again, the cliff is going to be how long until the package starts vesting, whereas the vesting schedule is going to be much longer than the cliff likely. And that's like how long until you have ownership. So typically like back of the envelope, maybe a 6-month vest, 2-year, 6-month cliff, 2-year vest might make sense for an advisory or board role. Again, it's dependent on the situation.
And one thing I just wanted to weigh in
Yeah.
on based on the question is that, because an advisor relationship is a contractual relationship, people are negotiating the terms of that relationship. There's a lot of flexibility there. So, could you have an advisor relationship that was for a fixed duration, or could it be indefinite? Yes, but that might not necessarily track with this, track with the vesting equity that's being granted. So I just wasn't sure based on that question.
No, it's a great point, Breen. And then the other, quadrant of understanding the equity is basically the cap table, the capitalization.
Sorry, could I?
Oh,
yeah. My question. So I wanted to elaborate on that. First of all, there was a typo, so apologies. I think I'm just wondering about sort of what are the right set of questions. So if you're being offered a percentage of equity of ownership in the company, the right next question, I think, is like, okay, well then what is the current valuation?
Yep.
Then there's the other sets of questions, which I think are, what would the term be for the contract? And then in addition to that, then what is the vesting schedule and what is the cliff? I mean, are those the right 3 questions?
I'd say there's a lot more than 3 questions.
Basic.
It's nothing is going to be like, here's always the playbook. I think today we're talking about different concepts and things to look for. But frankly, and we'll get into this more, but as somebody who is an active investor, I ask a ton of questions that are different based on what is the business, what's the industry, what's the traction, what's the scale.
Yeah.
So I think those are great questions across the board. Yes, always to look at, but then there's other ones depending on the situation as well. What's your funding? What's your runway? Right? And we'll cover some of that in this. I'll also share an intro to angel worksheet that I think is really helpful when you're thinking about angel investing, and some of it digs into some of this as well. But it's a great question, Catherine. It's a tough one to answer because it changes.
Totally get asking questions about the business and the runway and what sort of investments you had. I just specific to the negotiation itself.
Yeah.
Once you've decided you want to take an advisory role.
Yeah. I think
the package.
Yeah, I think, and again, it depends. We're talking about, options on this slide, but if it was a safe note, or, convertible, then some of these terms may not be applicable in the same way. So it's a little bit of a tough one, right? Like a safe note, there's not actually a valuation per se, but there are other terms that are negotiable. So I'm trying not to overcomplicate it, just recognizing there's a lot of folks on this call. But basically what I would say is understand, if you get to the point of, you have a package or an offer, what is that instrument and what are the things you need to understand about it? And what is negotiable, or, what could you potentially negotiate? And then crafting that language and that dialogue so that you're getting something that's aligned based on the note or the options that are on the table. So if it's options, you're right. It's, what is the percentage of ownership? What was the last valuation? What's the vesting schedule? What's the cliff? That will also be very clearly in writing, or it should be. And I guess percentage of ownership wouldn't be, they have to confirm for you, and also valuation. But if it's another type of instrument, it would be a little bit different in scope. But yes, you absolutely would be agreeing, and that would be in writing, term and role and all those things as well, if we're talking about stepping into a role. But great questions. We can pick that one up also again, a bit later. But let's talk, quickly about the cap table. So the cap table of capitalization of the business is basically, where's the money coming from? Who owns the business? So as an investor, I'll say, if I'm stepping in and evaluating a business, I want to make sure the founding team, is retaining a good chunk of ownership, because that's really important for incentive. That's important for them to maybe have, future fundraising, efforts that are successful, where again, they're going to have enough ownership where it makes sense. The cap table is basically, if I become an owner in the business, I am then on the cap table. So we talk about, wanting to get more women and diverse folks on the cap table. We want you all to step into more equity and ownership. So whether you are stepping in and signing a safe note, or getting an options package, or those restricted stock units, all different forms of stepping in as an owner. And by the way, when you do negotiate, understanding what is the capitalization, how much are you giving to the employees in terms of the equity pool, or how much have other advisory folks gotten, that's really good information. So you can absolutely ask those questions. When you are an investor, of course, you're given more information to what is happening fundamentally in terms of progress and traction and revenues or costs of the business and things like the cap table. But even if you're not an investor, you can still ask for the ability to see these things. Let's also talk quickly about writing a check. So if you're thinking about writing a check to become a board member or an advisor, you need to be accredited. What does it mean to be an accredited investor? In the US, under the Securities and Exchange Commission, I'm going to give you one of the definitions, which is income or assets. You either need an annual income of $200,000 the last 2 years, or $1 million of net worth, not including your primary residence, or if you're in a couple, a household, $300,000 income over the last 2 years, or that $1 million of net worth, excluding your primary residence. And if you're an accredited investor, you can write a check into these, private companies. If you're not accredited, there are some other, mechanisms or ways. If you have securities licensing, financial professional, you've taken this exam, or there's actually potentially going to be another route based on an exam, even if you don't have the securities licensing. But for all intents and purposes, it's, the income or assets. If you are an employee stepping into an options package and then you're exercising those options, you do not need to be accredited. So if you're writing a check as an investor and you're getting a board seat or an advisory seat that way, you would need to be accredited. And when you think about, or you say, hey, I'm interested in writing this check to, land a board or advisory seat, there's a lot of things to think about, and we'll talk about this a little bit more throughout. But quickly, I want to just kind of remind you of the terms that we just spoke about. What is negotiable? Basically everything that I have on this slide: cliff, vesting, and ownership. If you're an employee, it's going to be a lot harder to navigate or negotiate on the cliff investing, but you can negotiate ownership. If you are stepping into an advisory or board package, you can negotiate all three likely. And by the way, what kind of ownership, should you get? We're going to talk about that as well. So the cap table, just very quickly, who owns the business? These are some of the things I kind of talked about before. A few points I didn't bring up, which are really important, is how much financing or how much, funding has that business raised? What was either the last valuation or what is the current valuation? And when you start thinking about, valuations, it's really important to understand a valuation is kind of this, based on the market. It's market dynamics. It's investor supply and demand. It's not, oh, well, I want to raise here, and so it's going to raise there. It's a bunch of data points. It's a story, and oftentimes not super data driven if it's an early stage business. If it's a more sizable or more, let's say, further along business, it probably is driven by revenue or profitability. But so much is the story, the investor demand. And there have been these, massive blowups and, kind of blips in, the history of, financial markets because of, excitement and, exuberance and, people, doing retail flow trading or, and literally in the Netherlands, centuries ago, tulips had this, outsized valuation because everybody thought they were worth so much. Salt back in the day was worth more than gold. So just recognizing, right, investor supply and demand is really the thing driving the valuation. So if a company is successfully raised at a $10 million pre-money, meaning before they take the money in, great, that's the valuation. That's what the market dictated. If the company tries to raise at 10 and they can only raise at 5, then they raised at 5. So the actual data point of where did they raise is a pretty significant thing, not just, oh, well, this is what I think we're worth. But it, of course, is good to ask, the questions and dig in. So some questions to ask, per a little bit of our discussion earlier. And these are not by any means, fully inclusive of all the things you should ask. But if you're an employee, understanding things like, well, what is the funding? What is the traction? what role are you stepping into? Because if you're an employee and you're stepping into a senior role, you may have some more negotiation power than somebody who's like an entry level, just starting out. So if you're early, one of the first 10 hires or one of the first 20 hires, that's very different than, joining when they have 100 employees. But if you're joining when, as a CRO or, a really, executive role, even with 100 or a few hundred employees, you can still step into something substantial, but understanding the scope and the context. If you're an advisor or board member, you also want to be thinking about the positioning, right? Is this a company that you maybe want to invest in? Tracy asked a great question. How do you think about dilution or protect against it? You can negotiate basically anything and everything. I'm not saying everybody will play, but you can always ask for the thing. Anti-dilution. Can I re-up? Can I invest further? Is this protectable? But frankly, if you step in and you get, 20 basis points or 0.2% of the business, and they raised, at 10 million and then they're exiting at $1 billion, even if there's dilution at play, you're still going to have something substantial. Dilution is basically if they keep fundraising, your ownership percentage is going down if you don't re-up. Unless maybe there's a term that says you stay at this percentage. But typically the anti-dilution is you can invest more to stay at, whatever that pro rata or whatever you were at. Can an employee with equity move into an advisory equity role or vice versa? I have not seen an employee move into advisory or board. There are reasons around that. So typically I'd say you're joining a company as an advisor or as a board member, and it's not like typically an employee moves to. Difference, maybe it was a founder or somebody that moves on from an organization. Maybe they do after the fact, but if you're an active employee in an organization or if you're more junior, I don't see that pathway happening. But I have seen it where, maybe a founder, like maybe there was an ousting or I don't know, maybe they no longer aligned for them and there was a new founder that came in or new executive and that founder, retains or, picks up a board seat. The pie should be getting bigger. Yes. I love that, Kimberly. Yes. Preferred versus common shares, Helene, we have a lot to cover. So I might put that one on hold a little bit. Another thing I would say is if you are stepping in as an investor, and by the way, to learn truly about negotiating and asking all the right questions, the more practice you have, the more, you do invest and allocate or think about allocating, the more knowledgeable you'll be and the better you'll be at doing this. So I just want to make that little note and we'll talk about this throughout, but what cliff makes sense, what kind of vesting schedule, what should the valuation be? Is this out of scope? The more you think about or start showing up like an investor, the more confidence I have that you are going to, land in a really good package and with a really good role. And by the way, always chatting with, again, mentors, people like myself, if you wanted to, is a great pathing so that you're not just, in a silo, without information. Okay. So quickly, I want to make a mention. We talked about being an accredited investor. If you are not, that's okay. You can still start stepping into investment knowledge, start pathing, to becoming an investor and, or, getting equity through employee equity packages. So it's not just about writing checks, but you of course can be thinking about writing checks if you are accredited. Make sure you are digging into valuation and make sure you're not trying to be egregious, but make sure you're asking for the thing that aligns and what you need. The worst is you don't want to, accept a role and, oh my gosh, it's a 2 or 3 year board year term, and then all of a sudden I realize I didn't get enough. By the way, I sometimes write a check and I'm additionally getting equity on top of my check for doing my board work if they're not in a position to pay me cash, right? Or maybe on a, future raise, maybe they can pay me cash. Great. By the way, thinking about valuations, you can look at things like, articles or Crunchbase or, some publicly facing, websites where you can get some more information as well. It's not always perfect and it's not always, transparent, but you can definitely start there. So we're going to give a few examples of, advisory equity and board equity. In terms of this first example, advisory equity, what's the commitment? Back into the, expected time that you're going to be allocating. So let's just give an example. 3 hours a month over a year for a 2-year term and then my hourly rate is maybe, $350 an hour or $150 an hour, you can back into what's the expected valuation or ownership that I should get based on the last valuation. So let me say that again. I have an hourly rate. There's a certain time commit expected over a 2 or 3 year term. I can back into what percentage should I be getting based on the last valuation. Maybe a 3 to 6 month cliff, multi-year vesting. This third point, cash is king. Cash is the thing that you can go to the bank and you can get and you can spend. Options, or I should say an equity package, right? These are the future state. Hopefully there's an exit. Hopefully it's worth something. Hopefully it's not cash. I've also seen people where they're like, you know what? For whatever reason, I maybe want to, charge more when it's equity, right? Thinking through these things and feeling good so that, again, when you agree on the thing, don't be egregious, but when you agree on the thing, you want to make sure it feels good. Would you invest in the company? I don't want you just writing checks. Is this a company you actually believe in? And even if you're taking just equity, right, and not writing a check, do you want to spend 2 years or, a year, whatever the commitment is? Do you believe the company, has a good product? Or, do you believe that the impact is there? Do they have any traction? Or do they have, a 6-month runway and you think it's being run, really poorly operationally? And maybe that's not a company you want to step into. Ask the questions. And let's talk quickly about, the board seat. Again, would you invest in the business? If you're going to buy that board seat, would you invest? So I know the fourth effect is fundraising. And I know because you're on this call, you all probably are, big fans of it. And you've seen what they do and you've seen the value they bring. So if you're interested in investing in a business, maybe that's a great one to look at, right? If you're accredited. And maybe that's one where you could say, hey, Breen, hey, Kat, I want to write a check. I want to be on your, advisory board. And maybe there's an opportunity there, right? I see Breen smile. So think about, right, what are the businesses you believe in? What are the businesses where, you actually want to support them and you want to write a check into it? And don't just write a check just because you're trying to land a seat, unless maybe that's all you want to do. I really want you to think about if you're stepping into that commitment. And again, a board seat is typically a multi-year commit, right? Make sure it's aligned before you actually make that commitment. An advisory one is a little bit different, right? Typically advisory, it's less formal, maybe it's less hours, but a traditional board seat, right? If that's multiple years and it's structured and, there's a lot that goes into it, make sure you're aligned before, you write that check or you step into it and say yes. So again, we're touching on concepts here. We still have a bit to cover. I want you to start thinking like an investor. And part of it is investors truly are getting rewarded in so many ways. Immediate ownership. When I talked about the cliff and the vesting, if you're an investor, forget it. You're immediately vested and there's no cliff. You write the check, you're an owner of that business. You're not waiting for that, cliff in the vesting schedule. If you're a founder, and I know a lot of women that have started businesses, but they're also investing to diversify. Or maybe they're waiting to invest, once they have a payout, hopefully from their existing business. But thinking through, right, what can you do if you have a little bit of spare, capital? I don't want, as an angel, just a portfolio of 3 companies or 5 companies. I happen to have, investments in 40 companies, but, you want to think about building a portfolio for diversification. So 15 or 20 companies. So maybe you're thinking, okay, I want to invest over the next couple of years or the next decade, and you start mapping a path to it. The influence, the access, the growth potential. I mean, these things are huge. I'm working with women where they wrote their first angel check, and it's not just how do I get in the mindset of an angel? How do I develop the confidence? By the way, you're never going to feel 100%. That's fine. But when you do the thing, you show up differently. Your mindset is transformed when you do the thing, right? If you don't feel great, you're sitting on the couch in your underwear, that's one thing. But then you put your clothes on, you put on, the fun makeup, the earrings, and you go walk around the block, you feel better. You do the thing. And that's going to influence your mood and your mindset. You truly show up differently. So a few more things quickly to run through. Tips, hacking success here. Learn by doing. You have to invest or at least participate. Our angel group, She's Independent Investments, which is fantastic. We're truly about experiential learning and mentorship. You don't even need capital to be a part of it, right? And you can show up and learn. And by the way, around growth mindset, which is such a popularized term these days, it has been data-driven and proven that you can improve your negotiation skills and obviously your investment skills by participating, by playing, by investing in these things. So do the research, get to know. If you never get to know, what are you leaving on the table? I'm not saying get to know, every day of your life, but don't be uncomfortable with that, because the worst thing that happens is silence, disengagement. No is not a bad thing. No means, great, how do we get it to yes? Let's ask questions. Let's dig in. Your negotiation should be establishing why they want you, why you are the candidate, why you are the person. You can show skills through the way you show up, through the way you negotiate, right? So that's what I have prepared. Just want to quickly mention, if you want to, follow us at She's Independent or get involved, we do have a promo code for all of you. I believe Fourth Effect is 10% off membership dues. And we look at deals regularly. I know we're partnered up with the Fourth Effect and excited to do more with kind of deal sharing. I know we're going to look at your deck and, see about potentially investing. So yeah, super excited about, what we do. And I'm going to share with you all also a link so that if you want to get our Intro to Angel deal sheet, you're welcome to do so. But that's what I had. So if we want to get more, oh, thank you, Selena. Appreciate it. I swear I didn't ask her to say that. If you want to get involved, I also saw some notes about some healthcare folks in this group. We have a bunch of women from all over the globe, predominantly nationally, but all over the place. We do a bunch virtually. We have a lot of healthcare experts in our group. And yeah, that's what we had.
I was just noticing in the chat, there was a question about preferred shares versus common, but I wasn't sure what was the context of the question. So I didn't know if we had more context that came in and maybe there was still an outstanding question. So that may have, so whoever asked that question, if you still have it, if you want to give us some more context or speak up. Okay, so maybe not. We covered a lot of material.
I have a question.
Oh, go for it.
This may be a different question to whatever you were talking about. I don't know if the door is open for other questions from men, but if it is, then let me have a go.
Of course.
Okay, all right.
I know there's been some in the chat around that, but the Fourth Effect, we have many male members. We are not a women only organization. It is true that, we're mission driven to close the gender power wealth gap. But male founders, investors, members, totally welcome in our community, and we have plenty.
Good. Well, I'm one of them. All right. So very briefly, I was interested, I've been down this road before with other companies, but I'm in a new setup at the moment where myself and another guy, I'm doing all the business and the marketing, and he's doing the technology, have got together. He doesn't have much financial resources. He's also working for another company and kind of doing this evenings and part-time until we get enough revenue where he can switch jobs. So we're setting up an LLC with just me, a single member, but in due course, I want to kind of set up a negotiated deal with him. And I don't think it's necessarily, the whole idea was mine. I found him, we started working together, blah, blah, blah. But I'm trying to work out what a fair and reasonable starting point would be to discuss equity in the project, given that for all intents and purposes, I'm financing it and he's just working at the moment as, if you like, a contractor. Any advice or information on direction with regard to how I pursue resolving that process?
So is the company going to market and getting other funds as well, or you're just looking at funding?
It will be once we get traction, once we've approved minimal viable product, etc.
Okay. So it's interesting, right? I think it's a unique position where you want to make sure that because of maybe the current stage of risk and you haven't de-risked in certain ways, you want to make sure you're getting good ownership for this, earlier check. But I would say there's a lot of questions around, how are they positioned? maybe if there are others in market or others, you know, at that type of stage that you can look at in terms of, you know, where they fundraised or what kind of valuations. I mean, it's tough to say, right? Because vertical and, you know, traction, you know, all these things really play in. And again, it's based on the supply and demand. So I'd say you're making the market because, you know, you're the investor. And so of course you don't want to take half the business if you're writing a small check, because that doesn't set them up for success. But what feels good, you know, what kind of valuation based on where they are, and what they've built so far, or maybe it is, you know, really early. Again, there's so many questions there. And so maybe that's a sidebar. Yeah.
And I would just weigh in, you know, as a lawyer from the legal, like if you don't have a good lawyer, you know, I would get one, because the operating agreement in that LLC, I think is really, there's a lot of points there that would come into play that you'd want to negotiate. So if you need a referral, I know there's some lawyers in this chat that maybe can reach out.
Yeah, hi everybody, I'm Adam Black, Cycling Batteries. You can find me in the chat. If you're lawyers that work with startups on this kind of stuff, we want to hear from you. Of course, we've got no money, we're bootstrapping, but we've got great potential. So, you know, come and talk to us, help us out. We need to resolve this kind of stuff.
Yeah,
because we're growing faster, faster than we're actually administrating.
and sorry, Breen, were you weighing in further?
So Natalie, there are some more questions.
Yes, I saw some more questions. So maybe we'll jump into those. And another thing I'll quickly say is I've done some one-on-one work when people are specifically diving into valuations or, you know, packages. So you can also email me, Natalie@she'sindependent.com. And I can give a little bit over email, and then potentially we can do some work together. But yes, I see a question from Marina. So maybe let's start there. I'm not fully understanding the distinction between buying a seat and being just a standard investor. As in, if I'm negotiating an advisory seat, what role exactly does writing the check play, and exactly how is it changing my role? So you can write a check to be an investor, right? And that's stepping into, you know, ownership. You could also write a check and negotiate to say, I want to step into an advisory or board seat with this check. People are sometimes, or founders and companies are sometimes open to that, not always. If you do the latter, if you're saying, I'll write a check and I want a board seat or I want this advisory seat, and you agree on the terms and all of that, I have said that I wouldn't want to just pay to necessarily be on the board and like just paying for the board seat. I might even pay to be on the board and then also want additional equity ownership for my work. So let me explain that. The check I wrote, it immediately vests. I have ownership on the $10,000, whatever I wrote into that company. But then my 2-year term or whatever is negotiated, maybe there's a 6-month or 1-year cliff, or sorry, whatever the cliff is, plus a vesting schedule for my negotiated equity package. So 2 different things. I realize it's a little confusing, and not every company is open to somebody who, you know, pay to play, but some companies really like it. Hey, I'm really aligned with you. I'm so excited. Sometimes people, you know, offer me something, an advisory role, and they're like, hey, we'll give you this equity. And I'm like, I want more ownership. I'll write a check. I didn't even approach them. They approached me, and then I write a check. So there's all different scenarios where, you know, writing a check and stepping into a board or advisory role may make sense.
Right. And I just wanted to add to that we've known this from day one. So we have a separate category in our board marketplace called Angel Advisor. So it's for exactly this purpose. It just basically gives you, as a board candidate, if you're also an accredited investor and you're open or you're looking to invest as well, it gives you a leg up. You know, it might make you a preferred candidate. But it's also great for founders because, you know, sometimes it makes sense for a founder. They're not interested in having someone sit in that advisory seat unless they believe in the company enough that they want to invest. So It's not always that, but you know.
Something I want to say, which I probably undersold or just completely glossed over, which I shouldn't have. If you're newer to investing, there's something really incredible about, you know, doing it alongside other bright individuals who have experience. A lot of people who, you know, started to play an angel, they're like, yeah, the first few were garbage, right? Like they didn't know what they were doing. I happen to have a finance background. I happen to have a ridiculous track record. By no means am I going to promise you're going to have 20x, you know, on average return as I did with my first 3-4 investments. But basically, by investing alongside others in terms of the deal sourcing, in terms of the diligence, in terms of all these things, you're stepping into likely a lot more quality kind of deal flow and investment opportunity. And additionally, when we come together, you don't necessarily have to write a check for 10,000, 25,000, or 50,000. You can write a check for 2,500 or 5,000 with us. And our collective check, which might be 100,000, might buy us a board seat. And then one of the people that invested in our group can get that board seat, whereas they wouldn't have taken somebody for, a $5,000 check individually. So group investing is a really interesting, thing for a number of reasons. So I just wanted to, make mention of that.
There was a question in the chat about should you ask for preferred with an early stage, like when you're coming in as an advisor? So I don't know if you want to speak to that,
Yeah,
Natalie.
I think it's interesting. There's what you can negotiate on, and then there's what's probably not negotiable. So understanding, again, you don't want to be egregious. You don't want to say, I need these things that are like crazy, but it's, hey, is this negotiable? Is this something we can work on? Let me give you an example. A safe note, which is a form of convertible. There are some standard things that as an investor, even though it's a standard document, you can still ask for and still may be smart. Hey, I want a post money, conversion. It's okay if you don't understand what that term means. Just there's some things that you can ask for. Asking, I want preferred instead of common. I don't usually see that with, angels at early stage, kind of investments. But there are things that are a little bit more standard and you can ask the questions, but keep in mind, if you ask something that doesn't make any logical sense, they're going to see the naivety and they'll, maybe not play with you so well. I think to be really successful in negotiating, you show you've done your homework and you're asking for things that are somewhat reasonable. So again, whether it's talking to mentors or others, that have more experience, that might be a good place to start. You don't need to do this yourself in a silo. Figure it out, do the research. And then when you ask, you want to come from a position of strength and you want them to respect you and say, oh yeah, she knows, or he knows what he's talking about.
Right. And one other thing, I put this in the chat, but there are some great resources out there, great blogs, great. So Y Combinator is really great place to go to get, to kind of double click on a lot of this. Like you want to know what a pre-money safe is, a post-money safe, what's the distinction? Also there's, I know Mercury has a blog that, talks a lot about like preferred shares, common stock, so you can like Natalie said, doing your research and having it be demystified when you walk into the negotiation is really important. And as a founder, you definitely need to know this to protect your cap table.
Yeah. I want to make one more mention. I know we're coming up to the hour, but I feel really strongly also about, and I say some uncomfortable things because I think it's really important to change status quo and to educate. We're really also, plugging into a lot of women's groups and, places where we see great deal flow. And also recognizing some of the folks out there, I'm gonna call out YC, don't do as great of a job as they should. They have great content and great things for you to learn around, but I can't tell you how many Black women have come to me and said they don't do a great job with women of color and Black women specifically. And so I think being intentional also to make sure we're plugging in and again, use the resources when they're free and this and that, but recognizing, where we show up and put our energy is important as well. So I think we're really trying to plug in with a lot of folks that, are aligned and meaning, well-meaning, and we love what you guys do at the Fourth Effect, or you gals, but recognizing and educating ourselves. Like I'll give another example. BlackRock, who used to be big on ESG, now no longer does ESG. Okay. When my wealth manager was like, hey, do you want to put this in BlackRock? I said, no, they don't do they're not supportive and they're actually like anti-ESG. Like the more we educate ourselves and the more that we know how to show up and say, what changes things, how do we, use our consumer spend and how do we, do the things that change the world and create the world we want to live in. I want more women, driving angel flows because that's going to influence our products. That's going to influence the medical treatment and, the femtech, like it changes the world. And so I'm a huge proponent of getting more women into angel, but also calling out those folks that can do better. So I was really impressed with Boulder Techstars. I'm in Boulder and I actually been plugging in, more locally, but their recent graduating class, such good diversity, such good representation. We had women in there. And I call it out when I see, 15% of women graduating from YC and not seeing Black women.
Yes. And thank you for saying that because I 100% agree. And yes, those are good online free resources, but everything Natalie said is true.
No worries. And it's just, I think we have to do it, right? Because we're in these positions where, because people are on the line and I know y'all care, it's like, if we're not calling it out, nothing changes.
Yeah.
Yeah. So we're running office hours where you can talk about, investing, or, drop in with questions around wanting to be an investor. Those are free. We do some free, founder resourcing as well. But I love what y'all do. Love, the members of your community. And I'm so excited that we get to partner.